Discovery Silver Corporation has undergone a structural shift during the fiscal year 2025, moving from the speculative valuation of a single-asset silver developer to the robust, cash flow-driven valuation of a multi-asset gold and silver producer. This transition, arguably the most significant architectural change in the company's history, was catalyzed by the strategic acquisition of the Porcupine complex in Ontario, a move that effectively diversified the company's jurisdictional risk and provided the internal capital generation necessary to fund the world-class Cordero silver project in Mexico. As of late 2025, Discovery Silver stands as a unique entity in the materials sector, combining immediate, high-margin gold production in a Tier 1 jurisdiction with massive, long-term leverage to the silver market through one of the largest undeveloped deposits globally. The transformation of Porcupine, transitioning to producer status. The acquisition of the Porcupine complex from Newmont Corporation, which was formally completed on April 15, 2025, represents the cornerstone of the company's new operational identity. This transaction was not merely an expansion of the portfolio, but a foundational pivot that established Discovery Silver as a Canadian gold producer of significant scale. The Porcupine complex, situated in the historic Timmins mining camp, includes a suite of legendary and high-growth assets such as the Hoyle Pond and Borden underground mines, the Pamour open pit project, and the Dome milling facility. The strategic rationale for this acquisition was multifaceted, aiming to provide immediate cash flow, significant exploration upside in a proven district, and a hedge against the permitting timelines associated with development stage projects in Mexico.
The financial engineering behind the Porcupine acquisition involved a sophisticated $555 million financing package, which included royalty and equity components designed to preserve balance sheet strength while funding the $200 million cash consideration paid at closing. This package was essential for providing the company with the liquidity required to implement aggressive investment plans at the site immediately following the takeover. The market reaction to this transformational move was exceptionally positive, with the share price tripling during the first quarter of 2025 as investors recognized the value of the team's ability to apply their extensive Timmins camp experience to these assets. Operational results following the acquisition have been characterized by rapid integration and efficiency gains. In the third quarter of 2025, which was the first full quarter of ownership, Discovery Silver reported the production of 63,154 ounces of gold, a notable increase from the 50,552 ounces produced in the partial second quarter period. This production growth was accompanied by a robust gold sales volume of 66,200 ounces, benefiting from an average realized gold price of $3,489 per ounce. The resulting revenue of $237 million for the quarter represents a 67% increase over the previous period, showcasing the rapid scaling of operations under the new management team.
The profitability of the Porcupine operations is a key component of the investment case. For the third quarter of 2025, the company reported net earnings of $42.4 million, or $0.05 per share, which stands in sharp contrast to the $3.9 million net loss reported in the prior year's third quarter before the acquisition. On an adjusted basis, earnings reached $61.1 million, or $0.08 per share. This financial performance was driven by attractive margins, with operating cash costs averaging $1,339 per ounce sold and all-in sustaining costs reaching $1,734 per ounce. The reduction in sustaining costs from the $2,074 reported in the second quarter highlights the team's focus on optimizing site-level performance and aligning procedures across the complex. The Porcupine assets themselves offer a blend of stable production and high-growth development. Hoyle Pond is a high-grade underground operation that has been a mainstay of the Timmins camp since 1987, while Borden is a modern, highly mechanized mine that achieved commercial production in 2019. The Pamour project, currently in the pre-stripping phase, is expected to be a significant future contributor, with anticipated production averaging 150,000 ounces per year over a 21-year mine life. The centralization of processing at the Dome mill provides a logistical advantage, and the company has already completed significant mill upgrades, including work on the crushing, grinding, and carbon handling circuits, to ensure consistent throughput.
The Cordero Silver Project, world-class scale and economics. While the gold production from Ontario provides the financial foundation, the Cordero project in Chihuahua, Mexico, remains the primary long-term value driver for Discovery Silver. Cordero is currently recognized as one of the world's largest undeveloped silver deposits, and its feasibility study, released in February 2024, outlines a project of immense scale, low capital intensity, and exceptional economic returns. The project is designed to have a 19-year mine life, with average annual production reaching 37 million ounces of silver equivalent during the first 12 years. This level of production would position Cordero as a top 3 primary silver mine globally, offering investors unparalleled leverage to silver prices. The economic fundamentals of Cordero are robust, even at conservative metal price assumptions. The base case analysis, using a silver price of $22 per ounce and a gold price of $1,600 per ounce, yields an after-tax net present value at a 5% discount rate of $1.2 billion and an internal rate of return of 22%. However, when evaluated at the spot metal prices prevailing in late 2025, where silver has breached $70 per ounce and gold has surpassed $3,000 per ounce, the potential economics are transformed. Under these conditions, the project's net present value increases dramatically, especially as the project reaches its full completion throughput of 51,000 tons per day by the 4th year of operation.
One of the project's most significant advantages is its position on the global cost curve. The feasibility study projects all-in sustaining costs of less than $12.50 per silver equivalent ounce over the first 8 years, placing the mine in the bottom half of the cost curve. This low-cost profile is supported by a favorable life-of-mine strip ratio of 2.0 to 1 and the high-grade nature of the early mill feed. Metallurgical test work has also confirmed excellent performance, with silver recoveries of up to 93% and the ability to produce clean, highly saleable lead and zinc concentrates. The simplicity of the open-pit mining and standard flotation processing further reduces operational risk. The path to development for Cordero has been significantly de-risked through land acquisition and technical optimization. In early 2025, the company announced the acquisition of the final parcel of land required for the development of the mine, a milestone that ensures full control over the project footprint. Furthermore, the company has implemented a water strategy that involves upgrading a local municipal wastewater treatment plant to provide the primary source of water for operations. This approach not only secures a sustainable water supply in an arid region, but also provides significant socio-economic benefits to the local community.
Regulatory and permitting landscape, a new era in Mexico. The regulatory environment in Mexico has been a source of significant scrutiny for mining investors, particularly following the 2023 mining law reforms. These reforms introduced more stringent environmental and water requirements, shortened concession durations, and established a 5% profit-sharing mandate with local communities. However, the political landscape has shifted significantly with the inauguration of the Claudia Sheinbaum administration in late 2024, which has signaled a more pragmatic and accelerated approach to mining permits as a means of securing supply chains and driving investment. Recent reports from the Ministry of Economy indicate a concerted effort to clear the permitting backlog that stalled mining investment in previous years. The Extractive Activities Coordination Unit has already resolved 110 of the 176 stalled projects inherited by the new administration, with the goal of normalizing all administrative procedures by mid-2026. Minister of Economy Marcelo Ebrard has publicly emphasized that mining permits are a national priority, and the recent approval of environmental and land use permits for other major projects in Chihuahua and Durango has increased confidence that Discovery Silver's Cordero project is next in line. For Discovery Silver, the critical milestone is the approval of the Environmental Impact Assessment, known in Mexico as the Manifiesto de Impacto Ambiental, or MIA, which was submitted in August 2023. The company has maintained an active and transparent dialogue with Semarnat, the Federal Environmental Authority, and management has expressed increasing optimism that the permitting phase will be completed by the end of 2025. The regional government of Chihuahua has also mapped out Cordero as a cornerstone of its mining investment pipeline through 2030, reinforcing the project's strategic importance at the state level. The company's commitment to high environmental and social standards has been a proactive hedge against regulatory shifts. Discovery Silver has received the Quality Environmental Certification from Mexico's Federal Attorney's Office for Environmental Protection and the Socially Responsible Enterprise distinction for 2 consecutive years. These awards reflect a corporate culture that prioritizes sustainable development and community engagement, factors that are increasingly decisive in the successful permitting and operation of large-scale assets in Mexico. Leadership and execution. The Kirkland Lake pedigree. The executive leadership of Discovery Silver is a central element of the company's investment appeal, as the team is largely composed of the architects of Kirkland Lake Gold's historic growth. Tony McCooch, the president and CEO, previously led Kirkland Lake Gold through a 5-year period of transformation, growing it from a junior producer into a top-tier major before its merger with Agnico Eagle Mines. McCooch is a seasoned mining executive with over 35 years of experience, and his familiarity with the Timmins camp is a critical asset for the optimization of the Porcupine complex. The management team includes several other high-profile individuals with extensive track records in exploration, operations, and finance. Pierre Roque, the chief operating officer, brings over 35 years of engineering experience and previously served as the VP of operations for Kirkland Lake Gold. Eric Kallio, the Senior Vice President of Exploration and Growth, is a professional geologist who led exploration strategy at Agnico Eagle and Kirkland Lake, overseeing some of the industry's most significant discoveries. Allison White, the Chief Financial Officer, contributes over 20 years of executive finance leadership, specializing in building high-performance teams in the mining and technology sectors.
This Kirkland Lake legacy is not just about individuals, but about a proven methodology for identifying undervalued assets, applying technical rigor to improve operations, and aggressively pursuing exploration upside. The board of directors also reflects this deep industry expertise, with Chairman Murray John and directors like Jeff Parr and Barry Olson providing oversight and strategic guidance based on decades of experience in global mining projects. Olson's experience in developing the Peñasco mine, Mexico's largest open-pit operation, is particularly relevant to the future development of Cordero. Exploration and resource expansion, unlocking district-scale potential. Exploration remains a core pillar of Discovery Silver's growth strategy, with the company committing significant resources to drilling across its vast land positions in both Canada and Mexico. In late 2025, the company reported encouraging results from a 140,000-meter drilling program at the Porcupine complex, aimed at expanding existing resources and identifying new targets near mine infrastructure. Drilling at Hoyle Pond revealed multiple high-grade intercepts in the S-zone, including 23.95 grams per ton gold over 7.1 meters and 150 grams per ton over 3.1 meters, suggesting that the deposit remains open and high-grade at depth. At the Borden mine, exploration drilling northeast of the main zone successfully identified high-grade intersections, such as 11.48 grams per ton gold over 5.2 meters and 13.88 grams per ton over 6.9 meters, which have the potential to extend the mine life of this newer operation. Meanwhile, at the Pamour project, drilling within all 3 phases of the planned pit design returned wide intercepts of mineralization, including 1.44 grams per ton over 104.6 meters, reinforcing the scale of this future production center. The identification of the Owl Creek high-priority target, located just 3 kilometers west of Hoyle Pond, has also yielded positive results, with intercepts like 4.08 grams per ton over 16.2 meters, indicating the potential for a new source of mill feed.
At Cordero, the exploration focus has shifted toward property-wide targets that could further enhance the project's economics. The company has identified several high-priority areas, including La Perla and Porfido Norte, and plans to initiate more extensive drilling once the construction phase for the main deposit is underway. The current mineral resource at Cordero includes a significant component that sits outside the feasibility study pit, representing approximately 240 million tons of measured and indicated material that could be brought into the mine plan at higher silver prices. The combination of these Canadian and Mexican exploration initiatives provides Discovery Silver with multiple paths to resource growth and long-term production sustainability. Financial strategy and capital allocation. Discovery Silver's financial position at the end of the third quarter of 2025 is a testament to the success of its acquisition and integration strategy. The company reported a cash balance of $341.5 million as of September 30, 2025, which represents a 35% increase from the previous quarter, largely driven by the generation of $86.8 million in free cash flow during the period. Working capital was also robust at $224.2 million, providing a significant cushion for ongoing operations and growth initiatives. Liquidity was further enhanced in the third quarter through the announcement of a new revolving credit facility for $250 million, which includes an accordion feature for an additional $100 million. This facility, combined with the existing cash on hand, brings the company's total liquidity to nearly $600 million, ensuring that Discovery Silver is well capitalized to move forward with its investment plans for the Porcupine complex and the final permitting and pre-construction work at Cordero. The company's ability to secure such a significant debt facility on attractive terms reflects the banking community's confidence in the management team and the cash flow generating potential of the assets.
Capital allocation for the company is balanced between sustaining the existing operations and investing in high-return growth projects. In the third quarter of 2025, capital expenditures totaled $65.2 million, with $20.8 million dedicated to sustaining capital and $44.4 million allocated to growth projects. Growth capital was primarily directed toward the pre-stripping of the Pamour project and long-term infrastructure investments at the TMA-6 tailings facility in Ontario. At Cordero, growth capital spending was focused on land acquisition and technical studies to further de-risk the project's infrastructure requirements, including natural gas and power generation options. Share structure and institutional ownership. The share structure of Discovery Silver reflects its recent growth and the significant capital raises required to fund the Porcupine acquisition. As of May 2025, the company had 801 million shares outstanding, with a fully diluted count of 816 million. This represents a material dilution compared to 2024 levels, but it was a necessary trade-off to secure the transformative Porcupine assets and the associated financing package. The company's market capitalization has responded by surging to approximately $4.89 billion by late 2025, moving the stock into the mid-cap category and increasing its visibility to institutional investors. The institutional ownership structure is diverse and includes some of the most prominent names in the precious metal sector. Major shareholders include the VanEck Vectors Gold Miners ETF, GDX, the Global X Silver Miners ETF, SIL, and the Sprott Gold Equity Fund. Institutional holders such as BlackRock, Vanguard, and T. Rowe Price have also established or increased positions throughout 2025, reflecting the stock's enhanced capital markets profile. Notable individual and corporate holders include Newmont Corporation, which retained an 8.58% stake following the divestiture of Porcupine, and Eric Sprott, who remains a top shareholder with approximately 5% ownership, despite engaging in periodic rebalancing sales throughout the year.
Investor sentiment for Discovery Silver remains exceptionally positive, with a consensus buy rating from 7 analysts as of December 2025. Analysts cite the company's unique position as a diversified producer with massive growth potential and its current valuation discount compared to mid-tier peers as key reasons for the bullish outlook. The average price target of $8.76 for the TSX-listed shares implies significant potential upside even after the stock's strong performance earlier in the year. Cash flow. Discovery Silver's cash flow profile has undergone a structural transformation following the integration of the Porcupine complex, transitioning the company from a capital-consuming developer to a high-margin precious metals producer. In the third quarter of 2025, the company reported $153.5 million in net cash from operating activities, which translated into $86.8 million in free cash flow after accounting for capital investments. This quarterly performance represents a major acceleration from the $27.3 million in free cash flow generated in the second quarter of 2025. This growth was underpinned by a 56% increase in gold sales volume to 66,200 ounces and a record average realized gold price of $3,489 per ounce.
The growth trajectory for 2026 and 2027 is projected to be robust as operational efficiencies at Porcupine are fully realized. Analysts estimate that annual revenue will grow from approximately $609 million in 2025 to $1.012 billion in 2026. This revenue expansion is expected to drive operating cash flow to $473 million and free cash flow to $195 million in 2026. For the 2027 fiscal year, operating cash flow is projected to remain steady at $473 million, while free cash flow is estimated at $159 million as the company continues its heavy investment cycle. Over a longer 10-year horizon, the Porcupine complex alone is expected to generate approximately $1.3 billion in after-tax free cash flow.
Capital allocation is currently prioritized toward the expansion of production capacity, with a planned expenditure of approximately $529 million between 2025 and 2027. This capital is primarily directed at the pre-stripping of the Pamour open pit project and comprehensive upgrades to the Dome Mill facility. Following the completion of these major growth initiatives, capital requirements are projected to decrease to between $60 million and $80 million per year after 2028, which is expected to result in a significant expansion of free cash flow yields as production stabilizes between 300,000 and 330,000 ounces of gold per year.
Discovery Silver's cash flow sensitivity provides investors with substantial leverage to rising metal prices. Within the Cordero project framework, a 10% increase in metal prices is calculated to result in a 40% increase in the project's net present value. At the metal prices prevailing in March 2025, the project's net present value had already increased by 92% to $2.3 billion compared to the feasibility study base case. To support this growth without diluting shareholders, the company has secured a $250 million revolving credit facility with a $100 million accordion feature, bringing total liquidity to nearly $600 million as of late 2025. Valuation. As of late 2025, the valuation of Discovery Silver has undergone a significant re-rating, reflecting its transition from a speculative developer to a mid-tier precious metals producer. The company's market capitalization reached approximately $4.89 billion by mid-December 2025, with some estimates climbing as high as $6.78 billion following a surge in precious metal prices. This valuation is supported by an enterprise value currently estimated at approximately $6.36 billion. On a relative basis, Discovery Silver is trading at a trailing price-to-earnings (PE) ratio of approximately 143.9x. While this appears elevated compared to the broader Canadian metals and mining industry average of 21.9x, it is a common characteristic for high-growth companies in the early stages of a production ramp-up. Looking forward, analyst projections for 2026 suggest a significant compression in this multiple to approximately 19.01x as the full cash flow impact of the Porcupine complex and the pre-stripping at Pamour are realized. The company's current enterprise value to EBITDA multiple stands at 24.3x, which is increasingly aligned with senior producers in the sector.
A peer group comparison highlights Discovery Silver's unique position between established producers and high-grade developers. Its trailing PE of 143.9x is lower than that of Orla Mining, which trades at 167.1x, but remains higher than intermediate producers such as Fortuna Mining at 19.03x and Torex Gold at 18.91x. When compared to senior gold producers like Agnico Eagle Mines, which trades at an enterprise value to EBITDA multiple of approximately 25.7x, Discovery Silver is beginning to trade at a similar premium, reflecting the high quality and Tier 1 jurisdiction of its core assets. The valuation thesis is further supported by a sum-of-the-parts analysis of its two primary assets. The Cordero Silver Project alone has a net present value, NPV, that scales dramatically with silver prices. While the feasibility study used a base case of $1.2 billion at $22 per ounce silver, spot prices in 2025 have driven that NPV toward $2.3 billion. Simultaneously, the Porcupine complex in Ontario carries an estimated NPV ranging from $1.2 billion to $2.3 billion, depending on the gold price environment. Historically, Discovery Silver traded at a deep discount of 0.12x to 0.20x its net asset value, P/NAV, as a developer. Currently, its P/NAV is estimated between 0.56x and 0.80x, suggesting there is still significant room for a further re-rating as the company achieves operational stability and completes the permitting for Cordero.
Investment risks and valuation considerations. Despite the compelling growth story, an investment in Discovery Silver carries several risks that must be carefully considered. Operational risk is primary, as the company is currently in the process of integrating and optimizing a complex suite of legacy assets in Ontario. The decline in the weighted average gold grade at the Porcupine complex during the third quarter of 2025 is a reminder that mining is subject to geological variability, and management must continue to deliver on its exploration and resource conversion targets to maintain production levels. Jurisdictional risk, while mitigated by the recent policy shifts in Mexico, remains a factor.
Potential changes in the political climate, security concerns in northern Mexico, or future adjustments to mining and taxation laws could impact the timeline or profitability of the Cordero project. Furthermore, the company's high degree of leverage to metal prices means that a significant reversal in the gold or silver markets would have a direct and negative impact on its valuation and cash flow generation.
However, the current valuation of Discovery Silver appears to offer an attractive entry point for investors who believe in the long-term fundamentals of precious metals. The company is trading at a discount to its peer group of mid-tier gold producers, a gap that management aims to close as they continue to demonstrate operational excellence at Porcupine and move Cordero toward a construction decision. With a project NPV of $1.2 billion for Cordero at $22 silver and multiples of that at current spot prices, the stock offers a compelling blend of value and growth. Conclusion: a strategic pivot. The fiscal year 2025 has been a watershed period for Discovery Silver Corporation, marking its transition from a high-potential developer to a high-performance diversified producer. The acquisition of the Porcupine complex has fundamentally changed the company's financial trajectory, providing the cash flow and operational scale necessary to support the development of the world-class Cordero project. By assembling a leadership team with deep technical expertise and a proven track record of creating value, Discovery Silver is applying a disciplined and systematic approach to building a premier North American precious metals company. As of December 2025, the company is well capitalized, generating significant free cash flow, and operating in a macroeconomic environment that is historically favorable for gold and silver. With the expected approval of the Cordero permits in the near term and the continued optimization of the Ontario assets, the coming year promises to be another period of significant milestones. For investors seeking exposure to both gold production and the immense upside of the silver market through a high-quality portfolio of assets in stable jurisdictions, Discovery Silver represents an interesting case for further research in the current market cycle.